Good afternoon, everybody. Welcome to Trader Merlin Show. It is your Friday afternoon edition, the weekend edition, our trading week wrap up. What a great end to the trading week. Big moves to the upside, so I was pretty happy about that. I'll walk you through the closure of two of my trades. Two of them were closed out today. Happy about that, even though one of them could have made a lot more on it. It's all good. So super happy with that. Liberation Day losses have been fully recovered. That's right. And I'll look at that here on our charts here as we progress. You notice the graphic for today's show, Trading Week Wrap-Up. I have this bull on fire, just kind of flaming as it runs through there. So, awesome. Looked like a great week. I didn't have a ton of time to prepare. I've actually been sitting at the office. Pedro's here? What? Pedro's here? Crypto chart. You always want to just do crypto stuff. Good to see you, Pedro. Been a long time. Hope you're doing well. Got my Yingling in hand. Yes, Sava, unfortunately, I was so busy I didn't have a chance to pour myself a glass of whiskey. So I pretty much have either a Premier protein drink or a glass of water for right now. I'm sticking with the glass of water for right now. And I'll have my whiskey a little bit later on. So cheers. Happy Friday, everybody. Let me dive into our broader markets and see kind of what that looks like. And then I'll break down my trades as they happen today. As was mentioned by Andres, you know, the big sell-off from Trump's initial shock factor, you know, reciprocal tariff piece has now been erased. And I'll put a little vertical line right here in yellow. That's the day of April 2nd when that announcement was made. I actually thought we were going to see that market rally from there, honestly. I thought we were going to see it move to the upside. No, we had 4 consecutive days of massive declines from that presentation that was given from the Rose Garden. The markets fell 15.4% on the S&P in just 3 trading sessions. And here we are now, having, you know, taken these stairs up. We are now back up 18% off of that low. That's an 875-point move for the S&P 500, which is pretty darn fantastic. And yeah, actually erase. I think we're just slightly down below that number, but I'll call it erasing all those losses, which has been pretty darn fantastic. The interesting part for me is it represents, at least in my opinion, how do I say this the right way? I guess the nonchalant attitude from markets, because we haven't resolved anything. We still have not come to an agreement. We still have not pulled back tariffs. They still are there. There's still a baseline reciprocal tariff plus other tariffs with different countries. So kind of surprising. The market's kind of shrugged it off and performing rather well. Now, maybe people who have connections know that these markets are going to surge when Trump finally backs down or China finally comes to the table and makes a deal, and all of a sudden everybody's happy. But boy, pretty darn impressive, especially with what we had today. You know, I've been looking at this 5701 or 5710 mark for a few days now. As soon as we broke above that 5600, I was like, okay, well, that's probably where our next target's going to be once we broke out above here. So nice big move to the upside today. From a gains perspective, S&P was only mid-pack though. And I'm going to really go through all of these. Hey, Tony. I'm all of a sudden go through them from top to bottom. Big Eb says the S&P is down a whopping 3.3% year to date onto positive by year end. Well, that would be interesting. Whew, maybe that's a poll we should do, is who thinks it can be positive by year end. You know, there are many different camps out there. Of course, you know, it sounds like Don is bullish and thinks we're going to keep on drifting higher. For right now, I don't see any reason why we shouldn't. We should probably keep on drifting until there's some big action. For me, I've been mentioning that I think the longer this goes on without a definitive decision from Trump and Xi Jinping and other countries, to me, that's going to weigh eventually. And some of the economic data may have reflected that as well. Kenny says, how much do you think it's institutional versus retail buying? I don't know. I do think that there's probably more institutional buying than retail. I still think that the average person is pessimistic on what's going on right now with the economy and the trade wars. If we look at the latest University of Michigan Consumer Sentiment Report, which came out last Friday, let me bring that one up for you guys. Go back here. Actually, was it last Friday came out? Yeah, let me make sure. I'm pretty sure it was last Friday we got the University of Michigan Consumer Sentiment Report. And here you have the revised University of Michigan Consumer Sentiment. It actually ticked up just a little bit, but you notice the free fall we've had here, right? That's been a pretty significant decline in consumer confidence. Now, I'll zoom out here and show bigger pictures so you can see historical context. This is consumer confidence going all the way back into 2005. Even during the financial crisis, back in 2008, we only reached a low of 53, 54. Well, we are currently sitting at 52. So it tells us that people are very, very skeptical and not a lot of confidence with regards to the consumer's perspective. And that would lead me to believe that most consumers are probably bearish at this point, staying short, where maybe institutions know more than we do. And that most likely is the case, that institutions have access to more information. They've got connections, especially these ones who are butting up to President Trump and in the tech sector. So maybe they're the ones accumulating. When we look at some of the numbers, though, let's look at our Magnificent Seven, at least the four for the week. We had Microsoft on Wednesday night report earnings. Microsoft, fantastic. Not only did it have that big gap up, but it gapped up again this morning. Right? We had a red candle yesterday and then gapped up again, which was actually rather surprising given the news. All in all, if you look at Microsoft here, you look right where we're coming into, you're back to this harami, a bearish harami that goes all the way back into January of this year. We're almost there. Actually, let's tailor that where it should be. So there's where that harami, our supply and demand zone should be drawn out. That puts a supply zone on Microsoft right around 442 up to 448. So Lisa says, Microsoft, go, go, go. Yeah, absolutely. Magnificent Seven leading the market up. Yes, except for one. Right, so let's run them down in order. We had Microsoft, then we had Meta. Meta also reporting good earnings and then giving a very positive forecast for at least the next quarter, right? They look very positive out there. They were up another 4% today. So far, our Wednesday earnings were fantastic. Now, let's go to the stuff that wasn't as fantastic. Let's go to Amazon. We'll save Apple for last. So Amazon had that gap up yesterday, which is surprising, or actually not surprising because of what happened with the Microsoft and Meta earnings. That's the reaction there. Now, they reported earnings that were decent earnings. Their numbers were actually pretty good. It was the forecast that was the weakening part, certainly citing the tariffs and other stresses on their markets. And even with that, they were only down 0.12% on the day. That honestly is fantastic. And then that leads us to the disappointing, the bad child, AAPL. So Apple had a pretty bad earnings announcement. They were down in the pre-market significantly, rallied back a lot. We're only down 3.74% on Apple. But let's go look at that 5-minute chart here because it was wild in the after-hour session, right? There was your big sell-off on the market close Thursday night. A lot of volatility. We started to sell off again, and then as the markets opened, we rallied a bit, but kind of sideways. All in all, not as bad as I expected. I thought we'd see a much bigger down move on Apple. So all in all, we're okay with that for the session. Now, is that the piece that's leading the market up? Well, let's look at tech. And I think that the backpedal by Trump on the tariff situation for technology firms may be a big factor to this, right? So let me bring this out here. Zoom out. Sorry, my throat is... I've been talking so much this week, I'm surprised I can even speak right now. There's your Apple down 3.74. And certainly this rally that we've had of 18% of the S&P, I definitely think that Apple has been a part of that Magnificent Seven group. Apple's up 26% in that same period that the S&P is only up 18. So fantastic move there for Apple. Amazon, similar picture. Maybe not as much of a percentage gain, but from those same lows to where we closed at today, 18.62%. So it's even with the S&P 500. Google was up 1.8% today. Their earnings came out a couple weeks back, and they are up 16%. So right now, Google weaker than the S&P 500. We've already looked at Microsoft, but that has been the biggest jump there. Microsoft went from 344, closing at a price right now of 435. So that's a 26.2% gain for Microsoft over that 18-day trading session. Tesla. This has been interesting for me. It's actually been kind of quiet for Tesla. Surprisingly, Tesla was in the focal point for so long. In the past 19 days, it's actually up more than the S&P 500 by good margin, 34% gain. So far, your biggest gainer in the Magnificent Seven and the biggest impact on these markets, at least for now. We got two more to go here. NVIDIA also having a monstrous rally. Again, a lot of the market does not have the same picture. NVIDIA's up 32% since that same window of time. And Meta rounding it out here with a pretty impressive performance. Let's go back to their low point, which is there on the 7th, to where we closed at today, 23.89. So if you're asking about which one has the biggest impact, they all have a big impact, which are mostly better than the S&P 500. The one that is the best performing from a percentage perspective was Tesla, up 32%. As I say, 32 or 34? 34%, excuse me. And your weakest performer, not even beating the S&P, was Google at 16%. So yeah, I think tech is a big factor here. Due for a bounce. I think we kind of talked about that, where if you're looking for value and buying, might have been a good time. And I've been selling a lot of puts, hoping to get exercised on NVIDIA. I did not today on my NVIDIA. As you guys know, I have a lot of puts were sold at 104 strike price, which as of 2 days ago, I was like, oh, wow, I'm gonna be left with quite a lot of NVIDIA shares here on Wednesday is what I was thinking, and lo and behold, we've rallied from about $104 all the way up to $114 in a period of 2 days. So that one is great. That's going to end up, that one's expired and ended worthless. We'll see what happens on Monday if we get a chance there. Now, some things to be conscious of. Obviously, there's a lot of positive sentiment right now just on tech. A lot of people really focusing on it. Maybe I think that's what's driving it. But notice where we are, right? If you look at the horizontal line here, I'm about to draw on NVIDIA. We are right at the high point that we established on April 9th. I mean, literally dead on it as a peak today. So that's pretty important for me as a supply zone, as an area of difficulty for NVIDIA to get above. But there's multiple markets here that are coming into overhead supply. I would argue that Apple, if you go to the peak, which was here on April 14th, we've just toyed with that level at 212.94. Didn't really have any convincing break of it. And now we had a big gap down today. Of course, that is largely due to earnings. Amazon, similar picture. We could put a line right across that high from April 9th, and we just seem to be chipping away at it. Now, as I've mentioned many times, I believe in the concrete sidewalk analogy I love to use, which is the more times we hit this overhead supply level on Amazon at 192.65, the more likely we're going to rip through that one. And if that does, you could very quickly see this thing at 205. So it looks great from a shorter term trend, higher lows, but the same high. So an ascending triangle, if you will. Let's go to Google. Google is a little bit better because it did break that high from April 14th and April 9th, so it's looking better there. But now, what does Sava say? Merlin, would you ever do a show on having a fixed income manager or actually buying fixed income positions, corporate fixed income, US T-bills, muni bonds? Sava, we've done that quite a bit. When you have Bill Addis on the program, Bill is the bond master. Bill teaches the bond class at Trading Academy. It's called Canaries in the Coal Mine. It's a focus class. Yeah, I have no problem with fixed income. For me, it all depends on what your needs are. I'm not the type of person right now that, at least in my life, I have no interest in setting up weekly income payments or getting income streams on a quarterly dividend or getting bond payments. That doesn't interest me, especially when the yields are, 4%. If for some reason we had bonds that were yielding me, let's say 20%, I'm interested. But I need I don't need, but I guess I demand a higher rate of return. I know that sounds awkward, but if I'm going to take the time to be trading, I certainly believe that I should be getting a much better rate of return than what T-bills or treasuries. Now, I could go get junk bonds or corporate bonds and maybe get 6, 7, 8%. Not that interested. Margaret says, weekly yields are coming from selling options. Correct, but I don't look at, when I think of bonds, I think of I'm now receiving income payments of actual money and I'm taking that money to live with, right? Or cover my day-to-day expenses. I have no need for that. So for me, when I sell those weekly options, I'm not taking that profit from those options and spending it. It goes right back into compounding the account. So if I've got a $1,000 account and let's say I make a 10% trade and I get 10% yield on that, that $100 I made doesn't go into my pocket. That $100 gets rolled into the next trade, which will be $1,100, right? So I'm going to be constantly rolling and growing that account bigger and bigger. And then if it gets too large, I split it up into different accounts. But, Sava, that's, again, I have nothing against them personally. And maybe I'll change my tune. Well, actually, let me rephrase that. I will not change my tune. And the reason I won't change my tune is, if you're a trader, you know that there are ways that you could manage your risk fairly effectively. I think you can be a very good risk manager. And in my opinion, I was going to come across as, I'm going to ruffle some feathers here. In my opinion, you can always beat the bond market. I can always beat the bond market, especially when these bonds are paying 1%, 2%, 3% per year. I can absolutely beat those consistently year in and year out. So for me, I'm not interested in bonds. I do have some bonds. I actually bought some of those I bonds a while back when Bill was talking about it. I mean, first 6 months, I got 9% yield on it. Now we're talking, right? That is good for me. But I would say that for those that are nearing retirement and don't want to trade, then yeah, bonds are absolutely essential, which is why I do bring Bill on. I think that knowing where the bond market's going to go can dictate what happens in the equity markets. It's one of the most powerful markets in the world. So I'm more concerned in understanding bonds and how they impact my markets that I trade versus actually generating yield from those bonds. But there's some of you who absolutely be like, you know what? If I got 4% rate of return on the money I have today, I'd be set for life. Then just go buy a 10-year bond, lock it in for 10 years and call it a day. Absolutely. Absolutely. So I don't think I answered your question, Saba. It's not that high big up. It's not worth giving up 15 to 20% of your gains and having a manager for fixed income. Yeah, I don't think you need to have a fund manager. I don't think you need to have someone manage your money for you. Saba says it was more so for my parents. Yeah. So great transition in our topics here, but if you know that your parents need a specific amount of income, right? Let's say they've got cash, they have equity or they have cash sitting around, and you know they need X amount of dollars per month, then absolutely I would look and say, find a bond product or ladder or structure of bonds or annuity that gives them the rate of return that they need and lock them in, and now they know they have that money. I think for most people here, they're going to say, I'd rather keep trading. I'd rather continue to generate weekly income from my option strategies, if that's the case. What did I see here? I don't need my trading income for living expenses, but I use some of it for travel every year. Yeah, right. There we go. And I think that the challenge I've seen with most people is they don't grasp the art of trading. They understand the art of making money and they're trying to master that. But the art of trading, to me, is different than the art of making money. Making money, I think, just focuses you on the profit side of things. I think as a trader, you're focusing on making good trades that at the same time are managing your risk significantly so that you never take a big drawdown. And in doing so, we can adjust our strategy in any market environment to take on more risk when needed, as I have over the past couple of weeks, and less risk when we're more uncertain in different market environments. So after that big market sell-off, I took a lot more risk as far as selling puts because I felt we'd bottomed out. I felt we'd sold off enough, especially right around that 20% mark. So let's see. It works as long as inflation is under control. With bonds, I think bonds are a pretty big variable, especially if you get a big surge in demand for whatever bond product you're in. Again, we have a huge scale of bond products with different time maturities. Bill Doss is right. T-shirt is coming. Wait, the T-shirt? I don't remember the T-shirt. I'm going to see if I can get Bill Addis on next week. But, Sava, that might be a great question to bring up with Bill. Bill will give you all the info you need to on bonds. He is one of the brightest minds I've ever encountered with regards to bonds, and certainly opened up my mind. I don't want to come across as this negative Nancy with regards to bonds. It's just, if I look at the rate of return that I could get from whether it's the 1% strategy I've been doing, the more aggressive wheel strategy I've been doing, whether that's just my outright trading on equities and futures, I still think I can get a better rate of return than those bonds. But your parents don't want to be managing that. So maybe you can get into a situation where you are consistent enough trading options, let's say with a 1% strategy, and you can get that 1% rate of return per month, which is, I say, fairly conservative. Therefore, you're going to beat that bond product, which makes you 4%. You'll beat that by 8%. All right, you'll be getting 12. So your parents would love that, and maybe you take a commission for managing their money. Just make sure you have the right licenses. The majority of my cash is in short T-bills. If you're going to keep cash, if you're saying, I'm going to keep cash, then yes, absolutely, T-bills are great for that because you have very short-term maturities. Just make sure that if you do buy those, that you aren't in dire need of that money immediately. I think shorter is the way to go. The only issue there, Big Eb, is if you're buying short-term T-bills, which are going to be, a couple months maybe, and you have interest rates at 4%, but the Fed goes on an aggressive cutting spree, then when you go to redo it, you're not getting that number anymore, which is why the 10-year is so attractive. All right. So great question, Sava. It was a total left-hand turn, but I like the question. Sol says, I think it's better to have SNOX with Schwab and use that as collateral for option selling and collect a monthly dividend. SNOX. I don't know what SNOX is. I'm not sure what that is. Big M 4, 8, and 13 week on treasuries. Okay, so you got 1 month, 2 months, and let's say 3 months. So, but still, if they cut aggressively, then the next time you go to re-up and get those 8 week or 4 week, the yields are going to drop. Which is why long-term, it represents a pretty nice option for some people. And today, I didn't look at the 10-year today. 10 years at 4.3%, big move to the upside today, but pretty nice. But 4% just not cutting it for me. It's not going to cut it. Okay, let me continue on with the list here. I was working my way up to the top, I do believe. We talked about that Magnificent Seven, kind of its impact on the broader market. Certainly tech being a big beneficiary today of these market moves. I'm going to leave this line on the screen because this is an ascending triangle or a cup and handle that is broken out. Actually, it would be a cup and handle because it only had two. But we have broken out, and now, in theory, this measuring object should take us all the way up there to the peak, which is considerably higher than where we are today. That brings it to 22,284, which would be an ATH for the NASDAQ 100. So great news from them. I was actually surprised to see the Apple didn't drag down this market more. I don't know if you guys saw on the call, Apple made it a point that they believe they're going to lose $900 million because of these tariffs. That's just in losses. So obviously the earnings front and the forecast here going to look a little bit uglier. SNOX, equals 4% dividend. Again, I'm not happy with 4%. 4% is, if I wanted 4%, I would just open an Ally account. I've got my Ally account, make myself 4% and call it a day. Easy, just a regular savings account. Why bother having to go through the security markets and open up a position? 4% is, for me, would be unacceptable. China is considering negotiations. Yeah, Luis, so we've heard that. And here's the thing. This is where it's like I just get annoyed with the media. And again, I don't know what to believe, but China has said that U.S. is beginning the negotiations and America is saying, we're absolutely not negotiating. It's China that began negotiations. Like, just who cares who started it? This isn't, who blinked first. It's just, let's just work out a deal. So whomever blinked first is good. We can, maybe get this resolved. And I think that if we get this resolved, then the S&P will see some much more upside movement here. As it stands now, here's the SPY. So looking at this ETF here for the S&P 500, it would not surprise me to see some stall pretty much just a little bit above us here. Right at 573 to 576 on SPY. That's that last big turning point we had on March 25th. And from there, we had a pretty quick sell-off for 4 days. That probably is going to be your target, your next target here as we rally up in this nice uptrend. But at some point, unless we get big changes, we'll probably start to drift lower. I know some of you think we're going to all-time highs, and that could very well be. I still have that bearish tinge, and I'm just keeping that because Oliver's here, and I know he thinks I'm negative Nancy, which is fine. My trades that were closed today were long trades. What do you see? So it said, I think like we're double dipping. Oh, because you got a 4% yield and you're selling options on it? Certainly. Yeah, certainly. Just a little, the art of the cave. Good one, Andres. Yeah, I'd rather just focus on one instrument and trade it well and be consistent at it. So whatever works for you. Look, I've mentioned this before. Everybody has different strategies. And, I do this show kind of explaining how I do things and offer a perspective that might help you. My style is going to be different than a lot of people's, and it may not be your style, which I love the fact you guys are talking about different instruments and different ways you trade. At the end of the day, or at the end of the year, really, when you look back at your trades and you are achieving a rate of return that satisfies you, of course, we always want more, but some of us, you'll get to that point where you're like, I'm good with that, right? That's a great rate of return. Then who cares how you're trading or what you're trading or why? As long as that rate of return keeps showing up, keep doing what you're doing and try to improve on that style, which is where my focus is. I know you're joking. I know you're joking. You're welcome to poke fun at me anytime you want. You've earned that right. Almost to the top here. Almost to the top, and then we'll walk you through my MicroStrategy trade and then wrap things up. So we talked about technology. Russell was really your big shining star today, up 2.26%. Your targets can be the origin of this next gap, which is 2,059. Keep your eye on that one next week as we continue to rally. And of course, the 10-year having a pretty big move up today. And I'll be honest, when you look at this chart right here, it feels like it's just getting whiplash either way. Like not really sure which darn way it goes. It's like, oh, it looks like we're trending up. No, we're going, oh. So this one's very difficult for me to kind of say, yeah, I think we're going in a specific direction. I felt like we were going to start to see things go lower on the yield because that's what Powell wants, that's what Besant wants, and I would assume that they're going to manufacture a decline in the 10-year. But the wild card of having foreign powers like Japan and China maybe selling their bond holdings because of some of our actions, certainly drives the yield up. So, I feel like shrugging my shoulders here going, it's going to do whatever it's going to do. Luis says, supply and demand, that's it. I know nothing about patterns, shooting stars, puking dragons, just supply and demand. Luis, let me tell you how to one-up your game. Supply and demand is the best. That's the origin of the moves. But remember, when you look, if you go through Trading Academy, the principle of supply and demand is let's follow institutional footprints, right? Let's see if we can spot the big money because, my trades for, $100,000 or $200,000 or whatever, those aren't big trades. To some people, the numbers may seem large, but in the grand scheme of things, a $500,000 trade is not that big. It's not going to move a market. It's the guy who comes in with a $50 million trade that moves the market. So at Trading Academy, it's about identifying patterns, shapes on the price chart that helps me discern that there's a better probability of there being a big buyer there or a big seller. However, candlesticks and price patterns represent behavioral analysis. It's literally like a psychologist looking at a room full of people and telling by someone's body language that they're the shooter. Or knowing that the little kid that performs this action in the kindergarten class is the one who's always going to be a disruption. And he'll give you a tell because you know how they operate. Or the poker player who's sitting across from you that every time he scratches his nose, you know he's got a good hand. And he just went all in. And you're like, okay, I'm reading the signs. Chart patterns, whether it's candlesticks, and again, I don't think you should look at them all. I look at really I would say 5 patterns that I think are very relevant. And all they're designed to do is help me anticipate what's going on with the behavior analysis of the people buying and selling that stock. And if I can put that little piece of information to use and give myself even a 1% boost in probability, it's worth it. 1% pop. If I can maybe get, 10, 15% higher, even better. And they don't always work, that's for sure. Nothing always works. Nothing always works in trading. Anyway, don't forget about patterns and charts. Don't worry, Pedro. Boy, you're starting to become that annoying guy in here. I know you want to talk crypto. How many times are you going to tell me, bud? Let's see. Still, look at the bottom. Japan openly said that they'll sell our debt as a threat. Right. And so is China. If they sell our debt, our yields are going to surge, which is why we saw this big spike here. Was rumor. I don't actually see the trades, but rumor that rumor that China was unloading our bonds, and that's why we saw that yield jump. I mean, that is a colossal move in 5 trading sessions. How true is it? I don't know because I don't actually see their executions. Eric, the trader says, I'm currently reading Reminiscence of a Stock Operator. So much psychology involved. Absolutely. It's why it's my favorite book. And mind you, Eric, that book was written in the late 1800s. That's over a century old. And that stuff that's talked about in there is still relevant today. To me, I love that book. If you want to know more about psychology, I think that Come Into My Trading Room by Dr. Alexander Elder is a good one, and The Disciplined Trader by Mark Douglas, I would say, are very good books. Very good books. Lou says, any books you recommend recognizing those patterns? I did a video for Trading Academy, so if you go to YouTube's, let's see. Now, mind you, this is very old, but the content hasn't changed. It's just maybe how it's presented has changed. So let me go here to Trading Academy. So bear with me as I go through this. Trading Academy, and within here, we're going to talk candlesticks. I recorded this how many years ago? 7 years ago, I made this video. So there's a couple things here. There's what is a candlestick, and that's me. This was 4 years ago. Jeez, I was so much more handsome back then. And then there's this. So don't shoot the messenger. Don't complain about the quality of this and how bad it is. My apologies. It was done 7 years ago in our stand-up studio. But there you go. Hopefully that will help you, Luis. look at patterns. My personal feeling is don't waste your money and buy a book. Don't waste it. Don't do it. You'll waste your money buying a book on candlesticks. There is a plethora of stuff online that you can review. Certainly that video that I just showed you will help you a lot. Thanks, Big Guy. Who's that young fella? Yeah, that's a long time ago, man. What a handsome young lad that was. We had a really nice studio too. It's a really, really nice studio. And you can look at the graphics. I created all these graphics. Come on, this is pretty bad. But it'll give you the psychology of it and help you understand the psychology and behavior. Are you making fun of me for sitting there with my hands straight tight? Oh, well, you guys are ruthless out there today. Here we go. Is that better? I do this occasionally. I do that. I get Merlin's in a video. We're in a loop. It's the Matrix. Get me out of here. Anyway, I hope that helps you, Luis. Check that one out and give some feedback. You're more than welcome. Once you watch that and understand a little bit more about patterns, feel free to come back into here and ask me questions or ask the group questions. We got a pretty good group here who's happy to help out. You also have the email on the screen, which is tradermerlin@gmail.com. So if you have questions, you can always send them in there. I'm, again, more than happy to answer them anytime. So, okay. And Tony, did I get your question answered? I saw you ask something here. What are my patterns that I like? So with regards to candlesticks, I like hammer formations and shooting stars. They're the exact same thing, just one is upside down. That's it. If you crypto trading house looks like Bob Dennis stuff. You mean Richard Dennis? So I like shooting stars, hammers, and haramis, bullish and bearish. So I guess that's 4 right there. Those are the core basic candlestick patterns. There are a million others. Honestly, they have names for every 2 out there. Like there's bullish engulfing patterns, there's morning stars. Just understanding like dojis and things like that are important to help you understand the psychology. Now, if you are looking at chart patterns, there is a book out there which is called the Encyclopedia of Chart Patterns. And you just type .pdf, and here you go. You can get it at the Kindle store for $100, Barnes & Noble's for $100. But if you type PDF, there are areas you could download, like right here. I don't know, this is from Iran. This might be a little bit sketchy, but you can download that PDF book from a wide variety of sources. Now, there's many different revisions. They are updating that. They've updated it many, many, many times. However, what's great about that book is it'll explain a pattern. For example, one of my favorites is what we have going on right now on, let's bring it up here. What we just, was it Apple? I forgot which one we just had it on. It was a cup and handle formation. Maybe it was the NASDAQ. I'm looking at too many charts here. So here essentially is what's called a cup and handle formation. You had something trending down. It made a new low. Came back up, sold off but didn't go as low, and then came back up to that neckline. That's a cup and handle formation. Ideally, this would be in an uptrend, but it works in a downtrend too, and that just tells me there's a higher probability that price is going to move up. So yes, supply and demand is incredibly important. I would say the backbone for everything, but the patterns will help you identify which levels may work better or may work worse. Okanola says, can you say more about Ally Bank Savings Account? Not much other than, they're an online bank, so they don't have a physical presence, which allows them to save a lot of money. And therefore, they pass that savings on to the customer. So you can get at Ally Financial or Ally Bank, I think it's 4%. It may have changed. Let's see if I can bring up my Ally app. I used to keep just emergency funds there, but now I moved those over to another account so I could actively trade it. I don't need emergency funds, but is it 3.6 now? Thanks, Big Eb. They were at like 4.2, 4.3, and they've slowly been dropping their rate because obviously the rates are changing. And there was a period where rates were falling for a while. So is it good? Look, I personally would take Ally Bank over Chase Bank. Chase Bank's going to pay me 0.01%. Ally's going to give me 3.6%. Awesome. Also look at CIT. You talking Citibank, Tofi? Here's my only caution there for anyone looking for a place to park cash is I would say absolutely make sure it's a name you know and have heard of. And number 2, make sure that when you look at it, it's FDIC insurance protected. Now, I've seen stories of banks popping up, I say quote unquote banks popping up that are offering a much higher rate than that. If someone's paying you more than 4.3%, you should, I would say, run to the hills. And the reason for that is a bank is going to buy the 10-year. Maybe. I mean, they could buy shorter term yields, but they buy bonds, and the best rate they're going to get right now is 4.3. And maybe they can get better. What's the, let me check out real quick here. Let's see. Current bond yields. So let's go out to Bloomberg. They got a really good site there for bond yields. So right now I can get 4.3 for a 3-month. I can get 4.3 for a 10-year. So obviously they'd be buying the 3-month here. But as time goes on, these are obviously going to change. So the longer term rates are better. But if someone's offering you 5% interest for savings, which I have seen these numbers out there where people are offering 5%, run. There's no way that they should be doing it. This is safer money, not safest, but safer money. If someone's paying you more than 4.79% right now, something's wrong there. I would not trust that or believe that number for a savings account anywhere. And I've seen people throw out fictitious yields to draw on, it's people, but businesses, trying to bring in customers, and then maybe they are doing good with your money, but it's not insured. So make sure it's FDIC protected, stay with a big firm, and shop around. You know, one of the things I teach in the cryptocurrency program is if you hold crypto, it should be your job to say, now where am I going to keep this? Am I keeping it in a hot wallet or a cold storage? And if I do that, how am I going to get the best yield that I can? So for example, I could hold something like Polkadot, right? And I could keep it on Coinbase and make absolutely nothing. I could go into some wallet app and maybe make 4 or 5% yield. Or I can go stake it myself directly and make, 15% yield. I think with your capital, your savings money, you should be looking at that and saying, oh, where do I want to keep it? Big Eb, he could put his money in, Ally and make 3.6, but he's actually beating that rate of return and getting 4.3 for, a month or two. Great, right? This is just a way to generate, let me be clear here, that 4.2% or 4.3% that he's making is annualized. It's not exactly 4.2% for 8 weeks, right? It's annualized over the course of a year. Oh, Pedro, now I get it. It says Pedro, crypto charting analyst. I thought you were saying crypto chart and analysis. I'm like, you keep asking me for, I get it. That's your name. I didn't know you added that to the back of your name. I thought you kept repeating over and over, Pedro, like, do chart analysis. I'm like, man, now I get it. Anyway, all right. I hope that helped there, Okanola. Just be careful with your money. Yeah, I wish it was the whiskey, Big Ed. We're going to have some whiskey later on. I'm going to go help some friends set up for a Kentucky Derby party. All right, you guys out doing something fun for the Kentucky Derby? Anybody going to go watch that? Look, it's a love-hate relationship I have with the Kentucky Derby. It is such a manufactured event, right? Here you have all-day celebration. You're drinking and partying and spending money on fancy suits and nice hats and dressed to the nines and this big show of pageantry for a race that, lasts 30 seconds? 30 seconds or something? How many withdrawals does Ally account allow? I believe it's 10 transactions a month, or 10 withdrawals per month max, I believe. Definitely trust but verify on that one. Yeah, it's not a lot. But if you're not someone who's using it all the time, great. And I think that that might actually include checks. So check it. That was the big weakness I saw with online banks, is they limit the number of transactions you can make. Oh, Sapporo and sushi time sounds delicious. It really does. Garfield, I'm going on a cruise. Where are you headed? Hope it's someplace nice and tropical. I compared Ally and City, and the latter one. Huh? All right. Good to know. That's true. I look forward to it, Thomasine. It's just so funny that it literally is this 30-second race. It's so fun. The Western Caribbean. So you're going to go to Cancun, Isla Mujeres, Cozumel, that area, or are you going to go all the way to Cuba? Actually, you can't get to Cuba from a U.S. cruise ship, can you? How do you explain staking crypto to the regular population? Let the games begin, Pedro. How do we explain it to somebody who has no experience in crypto? Well, if you look at the way that your bank operates, when you deposit your money, the bank is using that money to fund operations and make money off of your money. If with crypto, when you're staking, the big difference is here, at a bank, you have centralized control. They verify every single decision that's made. With crypto, depending on the project, you don't have one person verifying everything. You could have thousands, in the case of Bitcoin, tens of thousands of people around the world that are verifying that whoever's making that transaction owns it. So how do you do that? How do we get consensus with, let's say, 20,000 people around the world? They all have to agree on something. So the way it works is there's software that you would download from Bitcoin. It's called Bitcoin Core. So the community builds this software. They all approve it, and everyone uses it on their computer. That computer is designed that when the miner is selected to make a block, it's a competition. When they're selected, they verify all these transactions that have come through. They check and make sure that each wallet that's sending from has a private key. So all of that needs to be verified. To incentivize those miners, in case I'm talking about Bitcoin here, the miners, you have rewards coming from the network, right? The code pays out 3.125 Bitcoin every 10 minutes. In the case of something like Ethereum, the network pays out 2 Ethereum every 15 seconds. It's a 15-second block time. So how do you explain staking? Staking is where I take my crypto holdings, in this case Ethereum, and I literally lock it into the blockchain. It's now committed to that blockchain as, let's look at like a custodial account. It's like I'm putting up something to be a player in the game, almost like an ante. So I put in $1,000 worth of Ethereum. It now sits there and I'm anteing in that game. Now, if I'm selected to be the validator, I get paid. So I could be earning, 2 Ethereum in 15 seconds. Well, when it's $2,000, that's pretty quick money. So staking is where you're locking in your cryptocurrency into a protocol. And by locking it in there, it's helping maintain the security and accountability of the network. The more validators you have in a proof of stake blockchain, the more people that are verifying transactions, the safer it becomes. And so that's what staking is. You're locking in your crypto as an ante to do business in there. You're committing it to the network saying, I'm going to verify transactions. And when you do that, you get rewarded. Difficult to explain. Very difficult, especially since I don't have any graphics here, but I'm not going to draw out graphics today. Is there a Canelo fight this weekend? I don't know. Seems like there's one every weekend, right? I know there's a UFC fight. There always is. Awesome. Western Bahamas, Grand Caymans, and Jamaica. Love it. Jamaica's a tricky one, man. Jamaica, they only want you to go in the really safe parts of town, and there's not many of them. So you gotta be careful in Jamaica. One of the 3 countries in the world that has a fully implemented central bank digital currency. The irony is, Garfield, the funny part is, when you go to Jamaica, no one wants to use Jamaican dollars. Even the locals are like US dollars. So bring a bunch of dollars with you, US dollars. They have a full central bank digital currency, and I didn't get to see it used anywhere. Not a good sign for the industry. Name the others. Bahamas, number 1. I think they were the first. I want to say it's Nigeria. It's one of the, it's an African country, starts with an M. I'm pretty sure it's Nigeria. And then you have Jamaica. And they're, these are all, you have to understand why. They're all very small economies. Bahamas, not a huge booming economy. What product comes from the Bahamas? Souvenirs? What product comes from Jamaica? Don't say weed. We have way better pot in the U.S. What we do have is, from Jamaica, Blue Mountain coffee, right? And reggae music is the export, man. I the bomba clock, And then you have, exactly, Blue Mountain coffee. And then you have the African country, which I think it's Nigeria, but I think that this is the litmus test for the world. These 3 countries, and there'll probably be some more, all eyes are on them to see, how does this work? How does that central bank digital currency function there? What are the strengths and weaknesses so that the next version, which is going to be a bigger country, like let's say Costa Rica or something, they'll have a better idea on a bigger economy, what the impacts are, and then eventually to work its way up to mainstream giant economies like Europe or US or China, Japan, whatever. Lakers lost, Kings lost, Dodgers out of town. Yeah. Bye-bye, LeBron. Little crybaby LeBron, did you get hurt in your knee? You fall down, go boom? I don't know if you guys saw a little collision. The guy he ran into somebody, and he was writhing in pain on the ground. It was so pathetically bad that even his teammates were like, dude, just get up. Just get up. Little LeBron, you twisted with your ankle. You hurt, you okay? Mr. Flopper, yeah. It's funny because they're like, oh, he's played more NBA playoff minutes than any other player in the history of the NBA. You know what else he has? Without question, he has the most flops and minutes spent on the ground faking injury than any other player. Anyway, I got some LeBron lovers in here. I know I'm going to get some hate mail on that one. All right, let me wrap up here because I got just, again, tons of stuff to do and take care of as I get ready for the weekend. Let's go look at our economic calendar. All in all, a great week. I forgot to tell my MicroStrategy one. So you guys know I'm out of NVIDIA. MicroStrategy, I'm out of 2. I sold the 377 calls against my position. It finished at 394. Would have been an extra $17 per share, but I don't care. I'm fine with it. I was very happy with that. And I believe, Margaret, weren't you asking me about the performance? Do I have the spreadsheet? I brought it up here for you. Here's the spreadsheet for it so you can see how that one panned out. So let me zoom in here. This is... that was not LeBron faking the flop. No, it was LeBron. LeBron ran into DiVincenzo. I think it was third or fourth period, and he just started flopping around. Yeah, Austin Reeves, I like that kid. I think he's got talent. LeBron, I'm just tired of his antics. I guess what bugs me most is when I watch sports, and many of you probably feel the same way. For me, it's an outlet. I want to forget about all the things I got going on, my work and personal life. I want to focus on a game and be entertained. What I don't like is when I get an athlete who uses his stardom to pontificate about race issues or societal issues or elections or presidents and makes it a spectacle, their opinions. And what LeBron has done in many cases has spouted off on a topic that he's clearly wrong and actually inciting more negativity. It's like, stop. If anything, you should be doing something to alleviate the stress and influence and problems we have. So, yeah, that's my main reason I'm a LeBron hater. He is a phenomenal basketball player, but you know what? As soon as the Lakers get rid of LeBron, I'll actually like the Lakers. What's not to like? Luka, what an amazing guy. Richie, Yakamura, they're great. Anyway, sorry, I went off. Well, this is why Tesla's not. I think it's a part of it. Well, people just don't like Elon. You know, Elon went in there and he gutted a lot of programs that many people feel. This is our challenge, is it not? I don't know if anyone here can actually tell me factually exactly what was cut, right? I know Doge has a website that's supposed to be fully transparent. On one hand, I would look at what Musk did with Doge, and it wasn't Musk, it's his team. I agree with it. Get rid of a lot of this fat. There's some stuff we shouldn't be sending any money to these purposes. On the other side, some stuff may need to stay there, and maybe it gets put back. But let's rip that Band-Aid off and see if the injury's still there before just keeping that Band-Aid on for years and years. I know I saw an interview yesterday with Elon Musk, and he was talking about how, was it the Pentagon? I think it was the Pentagon. They had like $5 billion of unregistered transactions. And in the analysis, Doge has found that they were actually renting out stadiums and renting out Caesar's Palace and having these huge parties on our taxpayer dollar. And now the Doge department has said, if you want reimbursement for anything, we need a receipt. You have to categorize what it's for. And all of a sudden the requests have dropped significantly. So we'll see. I mean, who knows what the truth is? Bottom line is, I think we'd all agree there's reckless spending going on somewhere in government and many places probably. Let's fix that and hopefully get our economy back on track. Enough of my politics. Let's go to my portfolio. So this was I told you I had ended up 600 shares of MicroStrategy. And you see the first batch here was 100 shares at $352.50. Then I sold another one at $350. And then I had 4 that actually were at $320. So a bulk of mine, actually average price was down around $320. So the way I did this is I write down the purchase price, what the current price is. Obviously, I got out at $377.50. So then I go through here, and I keep a track of every every premium I collect. So you can see, actually these numbers need to keep going on here. Let's go 8, 9. So for 14 weeks I've been selling options against these positions. Now, some of them came on later. As you can see, the second tranche here was back in February 21st. So I had the next 400 shares there. So, I track every transaction that was made. And last week, I had to buy back my MSTR calls, which I didn't like to do. I mean, that was expensive. So I bought them back. I ended up selling the 377s for $9.50. And at the end of it all, I had a net rate of return. It looks like average on all of it's right around 21%. If I was to take this and average all 600 shares, you're looking at a 21% rate of return on it, which ended up being $46,785. So that was from just on that portion of the account from January 24th. So let's call that February 1st. So February, March, April, 3 months pulling in, not too bad. Not too bad. Unfortunately, I had that one little hiccup along the way, which was here, where it shot up and I was forced to buy them back. Thanks, Garfield. I was debating even showing you this because I don't like to do, this wasn't intended to be a gloat. It's just been, this trade's been going on and on and on. You guys hear me every week saying, selling more calls against it. Selling more calls against it. And, at the end of it, that's what it ended up being. And it's great because for a long time, this position was underwater. I mean, if you look at where MicroStrategy was, we hit a low way back here of 230. And that was down significantly. But I kept selling calls against that because for one main reason, that this is tied to Bitcoin. Right? This is tied to Bitcoin. And I am a believer that Bitcoin's rally is about to begin. So I was comfortable with holding it just as long as I could sell those calls high enough where I wasn't going to get taken out. So anyway, I just wanted to, you can blame Margaret for that one. That was Margaret's doing. But anyway, there you go. It's fairly detailed, at least for what all the different, premiums I collected. And you notice that some weeks I'd get great premium. Like when I originally opened it, I got $15 worth of premium for a week. I mean, that was almost 20%. It was crazy premium. I think I sold those at the money or in the money. Week 2 was $10.50. And then it diminished quite a bit. And now, I've been collecting $3 here. So you're looking at roughly $2,000 to $4,000 a week on this one as it's been moving up and up and up. So it's been fun. It's been an interesting trade, but that one's done. And we'll see what happens in the next week. Right now, the only thing I have open is SMCI, and we'll see. I got to put some capital to use next week, so we'll see. See how it goes. Most would panic when down like that. You stay with the course and pulled out a nice profit. Yeah, and you know what? Big Up, could it have continued to go down? Yeah, certainly. But because of the Bitcoin holdings is one of the main reasons I kept it. Because it's got that Bitcoin backing it, and to me, once that rally starts, there we go. And I do have other positions, other accounts, but this is the one I'm sharing with you guys. So there you go. All right, let's look at your Monday schedule. Monday. Let's go here. Bring up the calendar for you guys. The 5th of May. Sell in May and go away, they say, huh? Well, our first 2 days have been pretty darn positive. For Monday, I really don't have much. You've got ISM services, PMI, final services, PMI, and that's pretty much it. And then on the earnings front, I don't see any big names on this list. There's some bigger names in the later tail end of the week, but let me bring up your earnings calendar for you since I forgot to preload it. Here is what we have cooking for next week. Palantir's on Monday. Yeah, that's right. PLTR. Let me go by market cap. So you got Palantir, you got Vertex Pharmaceuticals, the Williams Company. That's pretty much it for the big names out there. I'm trying to think of recognize. Oh, Ford Motor Company. You got Diamondback Energy as well. Oh, that's right. It is the 4th coming up. Dun, 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 dun. Yeah, old Palantir. This thing's been wild, man. Really wild. Big. I mean, those swings are crazy. These are 100% moves over and over again. Yeah, Palantir breaking all-time highs today. Pretty impressive. Let's see what happens with their earnings. Are you still holding, Big Ab? You still got your Palantir? Well, good for you if you do, man. That's a beauty. All right, everybody, that's going to do it for me. I'm going to wrap up. Hope you enjoyed the show today. Hope you had a great trading week. We'll see what happens on on Monday with these markets. Again, I have some capital to deploy. All in all, it's been a great week. I wish I had a glass of whiskey to cheers you with here, but I don't. We'll save that for later. But hope you guys have a fantastic weekend. Do something fun. And if there's something that you would like me to discuss on next week's show, email me at tradermerlin@gmail.com. Put it down below any of the YouTube videos. And then, of course, for you newbies, hit like, subscribe, and I will see you guys on Monday. Take care.